Hey everyone, welcome back to Compound Thesis, where we discuss the intersection of crypto and the capital markets. I'm Jim Hiltner, and I'm the head of sales at Compound. And our guest today is Tania Rief, and she's the founder and CIO of Senda Digital Assets. Now, Senda is a hedge fund that deploys quantamental strategies for vetted, diversified, and risk managed exposure to the crypto and digital asset space. Tanya, welcome to the show.
Thank you. Great to be here.
So I'd love to start with your background, because I mean, you've been at institutions like the IMF, Citi, Soros, Citadel, and you've been focused on macro and emerging markets. Would love for you to kind of tie your background into what made you start Senda, and what brought you to focus your efforts on the digital asset space.
Sure. So my story really starts in Venezuela. That's where I grew up. And for those of you who may not be aware, Venezuela had many currency crises over the years. My parents were actually professors at a public university. They had nominal wages that were completely decimated when we had these big currency blowups, these big inflation episodes. And that's really what got me interested in studying economics and studying currency crises. So eventually I came to do a PhD in the US at Columbia University in New York on international economics and currency dynamics. I went to work for the International Monetary Fund because this is an institution that was actually designed to help countries around the world manage their balance of payments crisis, which is what leads to currency instability. From there, I ended up at Citigroup, working in their economic and market analysis team, again, advising clients on currencies and rates. And from then on, I moved to the hedge fund world, where I spent the last 13 years. That's where I spent some time at Soros, at Lorient, at Citadel, at Alphaline. And this is basically trading interest rates and exchange rates and currencies. So clearly it was natural interest to me, since I consider myself a currency expert. That's what I've done all my life, from the academic side, from the public side, from the private side. I was interested in the crypto space. I was really fascinated by the opportunities, by the technology. I started to follow it closely, and it was really in the last few years where I thought it was sufficiently mature that I could take the leap and spend my professional career investing in this space. As we've seen, it's still a very nascent space. We still have our big ups and downs. Unfortunately, we had a big, what appears to be a big fraud in our space recently, and this of course sets us back, but there's going to be experiments. This is normal for new technologies, and I still think the technology is very promising. I still think it's going to be disruptive. I still think there's exciting opportunities ahead, and so I'm happy to be involved in helping the industry grow and being a part of it.
Yeah, fantastic. I mean, your origin story is, very similar to, I think, to the origin story of really Bitcoin, in terms of the genesis of creating, a non-sovereign currency. And so really interested to see how you've brought, your background into digital assets. But I'd love to kind of dive into, because I said at the beginning that Senda is deploying a quantamental approach. And for folks that are not too familiar with really what does quantamental mean, and how do you think about deploying that into digital assets? Would love to learn a little bit more about your investment strategy.
Sure. So the overall philosophy is to, when I say quantamental, what that means is that we're using quantitative tools to help and inform our trading decisions, our investment decisions. And what we try to do is to focus on the fundamentals. So that means that I think the space has a lot of promise, a lot of opportunity, but there's of course a lot of scams, a lot of Ponzi schemes, a lot of things that are not worth investing in. This year has been a clear example of that. So what we want to do when you invest in a new technology is to use all the tools you have, all the quantitative tools, qualitative tools, everything you can, to vet these things properly, to vet the risks, to vet the protocols, to understand the fundamentals, and make your best guesses into which ones of these we place diversified bets in a few of these protocols and tokens. We invest directly in the coins and the tokens. We can discuss a little bit more about that. And the idea is to say, which ones of these do we think are the most decentralized, the most promising in their use of play, the most capacity for growth and appreciation. And we use those tools to help us inform the decisions, build a portfolio that we think makes the most sense, and continue to reevaluate that, rebalance that, and look at it over time so that we continue to make to keep the winners and discard the losers as time goes on.
Right. Okay. So a lot of fundamental analysis, that goes into that, and I'm sure, as you alluded to, we're going to focus on the future here today, so we're not going to rehash all the recent events. But clearly, there's been a lot of disruption in terms of just overall market structure with centralized players, whether they're exchangers or lenders, facing issues, systemic issues across the space. So I would imagine that that's changing how you can deploy your investment strategy. Can you just walk us through a little bit how things might have shifted, how you're actually able to invest in these assets?
So let me give you a perspective on that, and what lessons do we draw from what we've seen. Part of the attractiveness of the crypto space is the fact that you can have decentralized protocols in the space. So that means that the risk of a central actor doing shenanigans and throwing everything, and destroying everything are lower the more decentralized the protocol is. Unfortunately, what happened is, in the interest of avoiding the huge volatility of a nascent space, a lot of the investors in the space thought, well, how do I get involved in the crypto place, in the crypto asset class, in all this potential exciting and new opportunity without the volatility? So the way to do that is to do market neutral strategies, and they're very diverse. They have their place, and there are many that do make sense. But unfortunately, a lot of these market neutral strategies really involve people giving their money to these centralized players, meaning these funds that controlled everything. They had very little visibility on what these guys were doing, and what these guys were doing on the other side was lending, and with very poor risk management practices. So what happens is, you give your money. This could have happened in the traditional world, in whether when you're giving your money and your assets to someone who's lending them for you and not telling you how they're doing it, what they're doing, and what their risk management practices are, right? So this is nothing specific to crypto or the crypto technology or anything like that. So these guys were just investing in things that were reckless. They were taking too much risk. They were taking too much levered risk. In some cases, they were investing in protocols like Terra Luna, which was not a fraud in my view, but it was poorly designed and not properly vetted by the people that were investing in that. So they were clipping this carry trade, these very high interest rates, without having a sustainable stream of income behind it to support the yield. So when everything collapsed, they had nothing to show their clients for, and everybody lost their money. When they're investing in the exciting world of decentralized finance, they lost all their money with centralized players where they had no visibility where they were spending the money on. This is in the irresponsible leverage kind of problem. On the other hand, you had, of course, the outright fraud, what we've seen with FTX, which apparently just downright took their money from their clients outside of the exchange and invested in from his own purposes, that's not improper risk management. That is just fraud, right?
Sure.
Native type fraud and so on. But again, what were people doing? They were trying to invest in decentralized finance by putting their money and leaving it in a centralized exchange, in this case offshore in the Bahamas, with very little controls. So that is really problematic. What you want to do when you invest in the space is, you either want to invest directly on the most decentralized tokens or coins you can find. And if you don't know anything about the space, I would say the most decentralized is Bitcoin. So you could just invest in Bitcoin and then, put these assets with your keys outside an exchange, or with a custodian, a regulated custodian. You could do that, or invested with someone that is very transparent of what they're doing. You understand what they're doing, and they're vetting this risk for you, which is what the service that we are trying to give to our clients. So what are we doing? We are taking directional exposure to the space. Our philosophy is that what makes this space sexy and interesting is that because it's a nascent technology, if you do the proper research and the proper vetting, you can get venture type returns on these investments. And you can do that in a liquid strategy. And you can do it in a relatively diversified way, because a lot of these investment opportunities in coins and tokens are actually quite liquid for you to do that. So the directional exposure, I think, is very attractive. Of course, it's a lot more volatile. But it doesn't mean, I mean, we of course associate risk with volatility, but it doesn't mean that those people that are selling these market neutral strategy with very little volatility are safer, because what
Mhm.
we've seen is you have other type of risks that are hidden. These
Embedded.
types of risks are counterparty risks, right? You don't know exactly. There are protocol risks. There are other risks. So the fact that you have no volatility doesn't mean you have no risk. It's just you don't see it right away. Similarly, if you have venture type investment, because like, well, we go venture, we don't see the volatility right away, but it's a very concentrated bet, and it's a very risky bet. What we try to do is we want to diversify it. We want to, continuously rebalance and, continuously look at, what protocols are winning the race, which ones are not, and, and doing that kind of work. So I think that with proper vetting, proper risk management, you can really avoid a lot of the problems that we've seen in the space, and you can take advantage of the attractive opportunities in the space in a responsible way. But it takes understanding that is a volatile space, that is still a nascent space, and it takes understanding that there are a lot of risks, and you need to vet them appropriately before just blindly investing in the space, and being exposed to risks that you may not understand if you don't do the vetting.
Sure. I mean, I would imagine that, this just further strengthens the value proposition that you're bringing to your clients, right?
I hope so.
Where investors are looking to get exposure to this asset class, and that, trusting, an experienced, manager such as yourself that is deploying these, rigorous, fundamental, quantitative investment research to deploy assets should certainly be, much more attractive, especially now that people are starting to take a step back and say, okay, yeah, the returns and the yields were super attractive, but if I didn't really understand fundamentally how this was being delivered, I got, in a bad position. And, certainly there's a lot of pain in learning that lesson. So maybe a step back to take, 5 steps forward. But could you just give us a sense, is that what you're hearing from LPs right now, or your clients, in terms of
So,
just their reaction to?
yeah, so LPs are all very different. Investors are all very different. They're seeking different things. Some people can take more volatility than others. The most important thing when you're investing in a volatile asset is to size your exposure
Mhm.
appropriately. You can't have a huge exposure if you can't take the volatility. Some of them cannot take that, an exposure, a big exposure in the asset class, or no exposure at all. The ones that can, and these are normally at this stage, I think mostly family offices,
Mhm.
they are more willing to say, okay, we see that here risks are probably asymmetric. We could go down further, but we probably have a really large upside here, and they are fishing for, when is the right time to get, exposure again, to get involved, understanding the volatility and the risk in the space. I think that what just happened with FTX, unfortunately, really did set us back. A lot of people that does not understand that do not understand the technology properly. They are afraid of getting involved, and they want to understand it better. And I think it's up to people like me to try to educate
Mhm.
and help the understanding that what just happened had nothing to do with the crypto technology per se. The technology worked well throughout. The blockchains are working wonderfully. The DeFi has, worked smoothly. This was a problem of centralized players doing things that are not appropriate, either in reckless risk management or in outright fraud. And we've seen that in traditional finance. That's nothing new to crypto. But because it happens in the crypto space, and it takes a little bit of understanding of why it happened that way, and what were the risks involved that led to that problem, and how to avoid that problem, then some people are just taking a step back and trying to understand it, make sure that the dust is settled, that we know where the chips are before getting involved. But certainly, a lot of the players that have been doing due diligence for the last couple of years understand the risks, know the space, and want to get involved. They do recognize that it's that we are at probably a good entry point, and they are sniffing around.
Yeah, no, I mean, this is definitely an inflection point for the industry. This is not the first exchange to, be fraudulent and have, centralized issues come to the surface. But it seems like there's much more momentum happening from an institutional perspective, where a lot of the research and the groundwork was done, leading into this cycle, and certainly now there's an opportunity to deploy capital. Do you think that this brings about like a more safe market structure, whether from just where the capital flows or where regulatory
I certainly hope the industry learns from this. They learn the importance of custody. They learn the importance of regulation. They learned the risks of yield that they don't know where it's coming from.
Mhm.
I hope it leads to better transparency. I hope it leads to perhaps some of these rescue funds that we've been floating around, hearing from Binance and the like, and that hopefully these are designed in a proper way in the future. Maybe the proof of reserves or audits. People learn from these things. This has caused a lot of damage,
Mhm.
and it will hopefully lead to improvements in time. And the more and more we improve, I think the volatility will be less and less. The trust and the adoption is going to increase. But unfortunately, we seem to have to go through these episodes in order to learn lessons, and for people to understand that it's not just about putting your money in anything that sounds crypto and and it's going to go up. There's a lot of risks. It reminds me in I think it was 2017-18 when the discussion was, it's not the tokens, it's the blockchain. The blockchain, it's what's cool. And then there was this Long Island iced tea or something that changed its name to Long
Mhm.
Blockchain, and then it just went up like 400%, and it was a beverage. So
Right.
there you go, for people not doing their due diligence. We've seen this before. We probably see it again. But if you want responsible investment, you need to just do proper vetting. And if you don't have the time to do it, then find someone like me or somebody else that you trust, and to help you navigate it, because otherwise it's just a very dangerous place to put your hard-earned dollars in.
Yeah, absolutely. I mean, especially because, the macro environment is changing, right? I mean, the last, number of years have been a very low interest rate environment, low inflation environment, and that has changed. And the Fed is doing all it can to continue to unwind some of the policies. And so, over the long-term horizon, certainly macro drives micro, and that's not the case right now because of the headline news and, all that's happening in our space from an idiosyncratic perspective. But just looking at using your macro lens, like where do you see us in 6 to 12 months, and how optimistic are you that things
Yeah.
are going to turn around in that time frame?
Well, it looks to me that we've had a few idiosyncratic events in the crypto space outside what's happening on the macro side of things. Of course, we have higher interest rates, higher liquidity, and all that story. But we've had the Terra Luna episode on top of that in the crypto space that
Mhm.
wiped out a bunch of leverage. Now we have this, the FTX that came on the back of the bankruptcies also of Celsius, and now we saw BlockFi, and it remains to be seen what happens with Genesis. So clearly, a lot of leverage is being wiped out of the crypto space, and it is coming at a point where we are beginning to see signs that the Federal Reserve may be turning more patient in their hiking cycle. And if we are to look at leading indicators of PMIs and perhaps lower inflation prints than expected, growth indicators, forward-looking growth indicators that suggest that the world is slowing down. Interest rates, of course, the curve inverted. So a lot of signs that suggest that we may be reaching a point where we're going to, the macro cycle will begin to soften and perhaps turn. If that's the case, and you have a crypto space that is a lot cleaner now, I'm not saying it's fully clean. We may see some new skeletons pop up in the next few weeks. It could happen, and we could take a lower leg, a leg lower again. It's hard for me to tell how clean it is, but it's certainly a lot cleaner, and we're very fast approaching a place where leverage is going to be pretty much wiped out. And you combine that with a macro cycle that may be beginning to turn, then I think the near term upside for the crypto space is actually substantial. Now, exactly how fast it's going to happen, I don't know. But I do know that the technology continues to improve in the background of all of this. The good protocols are going to survive. The bad ones are going to die. Maybe we're going to get new and exciting opportunities and ideas and insights, innovations in the next few months. That's going to continue, and then I think the grounds are going to be clear for an exciting run in the future. But again, I hesitate to give. I never like to give any
Mhm.
price targets, and I don't like to give any specific timelines. I can just tell that we are a lot cleaner in the crypto space, and we are beginning to turn on the macro side. So that seems positive, forward looking.
Yeah, absolutely. And we're seeing that in some of the price action. I mean, it's been remarkable to watch, the floor of 16K or 1200 on ETH has really held up substantially. So I'm not in the business of managing assets or taking directional bets. That's your job. So I'll keep my opinions to the side, but very much agree and think it's bullish longer term for the space. There's a lot of dry powder sitting on the sidelines that hopefully should be focused more towards decentralized applications and, true fundamentally strong protocols and businesses versus, kind of chasing yield and the opacity and the issues that we've run into lately. It likely will pop up again, but hopefully not at the scale that we've just seen, because, the smart money and the smart, folks that are really doing their homework will avoid those types of structures going forward, just given the past. But painful lesson to learn. Glad to see that folks like yourself are continuing to do all the research and sharpen your pencil and maybe think about how to take advantage of opportunities that are in the space, especially as investors want to get exposure. It's just a matter of timing and comfortability. So that's really great to hear across the board, all of your thoughts. Anything else that you wanted to share with us before we hop?
Well, I would just like to remind people that the technology is thriving. What we just saw is not a crypto problem. Fraud we've seen, since ancient Rome, like Larry Summers just said.
Mhm.
This is a problem that we may see again. So it's very important that whenever you look into the space, you vet these things properly. And remember, just because a protocol or a token says they are decentralized, it doesn't mean they are. You need to do proper research. You need to understand, because when you get involved in a centralized player, be it a token or an exchange or a fund that you're investing in, this central actor can do a lot of damage. So you need to do proper due diligence and proper risk management. If you do that, you will have open book for a lot of really exciting opportunities when they're properly vetted.
Absolutely. And just the amount of information that's becoming available and the tools to be able to do that research is growing on a regular basis.
Absolutely.
So a lot for investors and participants to digest here. Really appreciate it. Thanks again. And appreciate everybody for tuning in. We'll be back again soon. Tanya, it was a pleasure today.
Thank you.
Have a great day, everyone.